Hello, hello. We are live. And I am so excited to bring to this to you today. My guest is Nathalie from MyExpatTaxes. And this is a topic that is going to be of interest to a lot of people who are either currently living abroad or who are planning to move abroad, US citizens. So before we get started, I want to introduce myself if you're new here. My name is Patricia Brooks, and I am an American who moved to France in 2018 to kind of find myself. And now I help other people who are ready to start the next chapters of their lives living in a foreign country find the confidence and courage to do that. And on my channel, I share things about life in France or moving abroad. And sometimes I have guests like Nathalie. And today, Nathalie is going to share with us all she knows about expat taxes. So if you've got your questions, we will be answering them later. All right. So I want to welcome the people who have joined so far. Hi, Michelle. Hi, Diane. Hi, Dominique. Hi, Brian. Brian from Seattle. If you are joining, feel free to say hello and share where you're joining from. And I'm going to hand it over to Nathalie and let her introduce herself to us.
Hi, everyone. I'm Nathalie from MyExpatTaxes. So I am from San Jose, California. I moved abroad to Austria in 2015. And it's been a whirlwind since then. Me and Patricia were talking and basically just, thinking about why we made the move and, how we're looking for this peace, but this lifestyle that fits us. But at the same time, having to deal with the not so fun parts of being an expat, such as, obviously the taxes, the financial part of it, the investments, making sure everything, all your ducks in a row. So I'm happy to be here to talk about MyExpatTaxes. We are the leading US tax software for expats abroad. So really, if you're abroad, you have to file your US taxes. We know you, we understand you. I'm one of you, right? And we're here for you. And of course, what I obviously want to say as well is I was supposed to be on this 2 weeks ago and I wasn't able to make it and I missed it. And I'm so sorry to this entire community. I cannot express how much it is important to me to, make sure everyone's time is valued. So thank you for joining again and pardoning me, so to say. Thank you, Patricia. I appreciate
Thank you. Yes, yes. Well, we're glad you're here today.
it.
So you moved to Austria back in what year was that?
2015.
2015. And can you share a little bit about why you decided to make that move?
Yeah, so I normally say there's two big reasons to move. I mean, obviously there's so many, but one of them is, for work is very common. The other one is for love is very common, and for love was the one I chose. Long story short, basically, I studied abroad. I met someone. I went back to California, and I always thought, hey, I'm in San Francisco. I'm not moving. This is the epicenter of the world, San Francisco, California. This is where tech is. This is Silicon Valley. I live in the best place in the world. Period. And then I realized I didn't. I Some will think it still is, and to each their own. But for me, it was not the best place anymore. I was, in college still, so very young, but already working crazy amounts. It was, I was studying a lot, like more credits. I had multiple internships. I worked at a giant international tech company while also balancing a startup at or an internship at a startup. And I was 21 and I had no time and I was just hustling. And I saw, I saw an exit, right? I saw, hey, I know someone that lives on the other side of the pond and their life doesn't look like this and nobody's lives look like this over there. Let's try it out. I'm young enough to do it. This is the perfect time, this transition between college and then going to your career. And then, you know, a lot of it was luck. Obviously, I worked hard, I prepared myself for it, but then it basically fell into my lap because for the company I was working for, they had a branch in Vienna, Austria. And so I was able to get my first full-time job, not in San Jose, California, but my team was in San Jose, California, but they gave me the job located in Vienna. So really, it was
Wow.
on a Thursday. I badged out of work in San Jose. I packed up my laptop, took the Friday off. As the American, you took a 3-day weekend to go travel, move your whole entire life to
Wow.
Europe. And then on Monday, I badged into the office in Vienna, and I opened up my laptop, and my laptop connected immediately to the Wi-Fi and
Wow.
started working. That's my story, right? Like I said, it's work or love, and mine's kind of both, and I feel very fortunate about that. I stopped there. I
Yeah.
stopped there
Yeah.
for questions, or we can move on as you wish.
Yeah. No, well, I think the story is so interesting. One of the things, for me, I moved later. And I think that, one of the things you point out is earlier in life, you don't have your whole life already set up. So in some aspects, it's a little easier, but still it's a big move because you are moving, across the world. Right. And you did that over a weekend. Would you recommend that?
I don't generally recommend the things I do. I'm a bit extreme, but what I do recommend is to not let fear paralyze you, to not let fear of the unknown, right?
Yeah.
It's one of those things where sometimes you do have to be a little bit more spontaneous, because if you overthink it, you'll
Yeah.
paralyze yourself.
Yeah.
And the whole point is, at least is what my mom said to me, and I really took it to heart when I had asked her, right, what should I do? And she said, you can make money anywhere in the world. You can make money anywhere. You can work anywhere, but you don't necessarily find love or certain opportunities like that anywhere in the world. And so you have to think about which one is more important to you. And yeah, I had jobs in, San Jose. I was in this startup that was very promising. They asked me to even, drop out of college to continue to give me shares. And then I also had an opportunity to work at another startup that was about to go public and get some initial shares. But you can think of all the reasons why you should not go. I feel like a lot of them are money related. But again,
Mhm.
it's not always that easy, but generally you can, make a living somewhere else. And having a job and finding a job and making money is something, especially if you're creative, you know,
Yeah.
something you can do anywhere. So I don't know if I answered that. I
Yeah,
don't know.
absolutely. Absolutely. There were two really good nuggets there.
Okay.
Don't overthink, right? Maybe 3 days, that time frame is short to kind of, jump into a new job, a new country, all of that. But that spending too much time in the preparation, the planning, the overthinking, right, can really get in your head and slow you down or even stop you. So I think that is something that is I wanted to repeat, bears repeating. But the second thing you said was, and your mom, I have some things that my mom has said to me that have not necessarily that were good things, like for a while, but then they started to hinder me, right? And what your mom said, well, you can work anywhere, was very empowering, because I think one of the things that holds people back is maybe a belief that they, and I think, as you said, if you're creative, right, because you need to be creative sometimes to be able to find that work or that opportunity that will allow you to live abroad. But your mom said to you, oh, well, you can work anywhere, which just, to me, just kind of opened the door wide to say, okay, I could do this. Right. And I
Yeah,
think,
it's true. I mean, the thing is I'm of Vietnamese origin. Obviously, my parents went through a horrific thing in their life, and so they know firsthand you can work anywhere. You can
yeah,
have your whole entire life destroyed, and then you can go and look for another life, and it can work out.
yeah, good, good. Well, so I'm going to ask you another question or two about Austria, your life in Austria. When you first arrived, you think way back to 2015, what would you say was your biggest challenge?
German. speaking German. It's again, it's you move to a different country, it's a different language, and I think English can really hinder you because you assume everyone knows English. But the thing is that, but yeah, a lot of people know English, but the local language is different. How people make friends, how people interact, it's different. And so, at the company I worked at, people would answer me and write me emails in English because they knew I didn't understand German. But when it came to the lunch and the social
Yeah.
activities, they
Mhm.
wouldn't accommodate me. Why? Right? They didn't professionally have to. They weren't
Mhm.
paid to do so.
Mhm.
And so that was tough. And I think, at least that's one thing I really like with our company. So we are based in Vienna, Austria, and a lot of our employees are internationals, right? There are Americans in there too. There's people from different countries. And we're honestly, I think we are one of the few companies that are like, you do not need to speak German. And our working language is English and our social language is English. And you know, we, we will accommodate as much as we can because we realize it's not easy to be an expat. I mean, I feel like we have to accept that because we are made of expats and we are for expats, right?
Right.
But that was the hardest. That was learning the language and getting out of my head that I have English and that's enough. Because if you really want to make a life abroad, you should learn the language. As much as that sucks to hear, you should learn the local language and
I,
speak it.
I think it might not be pleasant to hear,
Yeah.
but I think it makes your life there even richer,
Yeah.
right? I think about my ability to communicate in French and how I've seen that richness grow as my fluency has grown, and I think it really does matter. So, well, can you share with me how how your German skills are today, and how did you get to that place?
They're a lot better. So
Mhm.
obviously work doesn't help, right? Because I'm always speaking English,
Yeah.
but I live
Mhm.
on the countryside.
Mhm.
My family-in-law, they speak German. So like living on the countryside is kind of what shifted things and having kids as well. So now our home life is in German. So the home life is in German. That's kind of how I got there.
Yeah.
But I have to say, working in the city where most people speak English in an international company didn't really help. It's
Yeah, yeah. So being more immersed in it is the thing that, yeah.
yeah.
Well, great, great. One last thing about your move, and then we'll shift into learning more about my expat taxes. So you've been in Austria for almost a decade. Um, how has that changed you?
Hmm. I think I don't know. I'm I think I'm probably just more understanding, I would say.
Mhm, mhm,
I think in general, if you move around, if you see how other people live and you really understand what it means to be in another person's shoes, like actually be there, be the
mhm,
outsider as well, um,
mhm,
be be a small fish in a big pond, you just have a lot more empathy, I
mhm,
think, for other
mhm,
situations. And I think when I lived in Silicon Valley, everyone kind of thinks this general way. At least that was my bubble. And so it was kind of, if you don't fit in this bubble, you're an outsider and I don't understand you because I was born in this bubble and I lived in this bubble. But now that I have been the outsider, it's
yeah.
kind of, I always try to think, okay, how does this person feel, are when we're talking to them, if there's tension, are they just being more defensive because they feel like they're not welcomed or something? So long story short, I think it's the understanding of
Mhm,
other people and to realize not this is not everyone's first language. This is not
yeah.
everyone's natural thing to do. Some people have very different backstories and that's okay. We're all different, right?
Mhm,
And the
mhm.
whole point is to be understanding of each other's differences and to accept them.
Yeah,
So
yeah.
yeah, probably
I
that's the
mean,
main change. At least I say I'm not a saint, I'm for sure. So
yeah.
I'm not 100%, but I would like to think that I am more understanding than the Natalie from 2014 that was
Mhm.
thinking San Francisco was the epicenter of the world.
Yeah, I think, yeah, I mean, I can truly relate to being more understanding, more empathetic. I remember when I was in the States, and I was working, and there was somebody who was English wasn't their
Yeah.
native language, and and I judged, right? I was like, why aren't they speaking grammatically correctly? I never said it out loud, right? But in my mind, right? And then I moved to France, and I was like,
You
oh,
got humbled.
yeah, the shoes on the other foot. Yeah, that wasn't so nice, Patricia. So yeah, I completely agree with that. So you moved to Austria. You had a corporate job when you first got here, but now you are the CEO of MyExpatTaxes. Help us understand how you got there.
Yeah, so like I said, I got lucky. I was able to move my job. It was a finance job in an international IT company. I got to move it to Vienna, Austria, and it was great. But of course, upon my first year, I heard you have to file taxes as an American living abroad, no matter where you live. If you're American, if you have a US passport or a US green card, you have to file US taxes if you basically earn money. And especially, I was married already, so it's the threshold to filing is $5. And I panicked. I asked my company, will you help me? They said no. We're not paying for that. I'm like, oh, okay. So I said, well, can you at least recommend me to someone? And they're like, yeah, we can recommend you to one of the big four. And I emailed the big four, and they go, oh yeah, 2,000 euros to start the discussion. Start the discussion.
Wow.
I didn't make enough to spend 2,000 euros to start any discussion. I didn't even make enough to have 2,000 euros end the discussion either, let alone start it. So that was kind of the first part. But I tried an expat tailored tax firm. It was not a great experience. I tried I tried a US tax software. It was not a great experience. So I kept that in the back of my head that every year this would be just terrible. It would be horrible. I hate this part. It's so nerve-wracking. It's so much anxiety. And then come 2017, so 2 years later, I'm really good friends with some folks at Cisco who are now the other co-founders of MyExpatTaxes. And we were just saying we work well together. Um, you know, let's start a business. And while we were thinking, okay, what business idea do we want? It was around the April timeframe, and I was like, let's solve this problem because I need a tax software that I can use because it makes no sense that I have to do this on paper. Because again, if you're an expat and you don't want to use a tax software and you want to do it yourself, you have to paper mail it. That's wild. And it's just, okay, let's solve this. So we did. We solved it. I went on, I came in enrolled agent with the IRS. I learned everything, and I continue to learn everything I can about US taxes focused for expats. So whether you're in the US as an expat or you're outside the US as an expat. And we always said we created tax software that would solve 70% of expats. So very simple, they're salaried, and the demand grew. People said, no, I'm self-employed, I need help. No, I have a foreign corporation, I need help. No, I have foreign investments, I need help. No, I want to talk to someone, I need help. And it's just more and more people came saying, I need help with this situation. And that's really how we grew, where we just said, okay, we'll help you. We'll take you in, we'll listen. And, obviously I come from the IT side. So I always said, and we'll automate it. So it's not this, we help you once and we forget it, but we automate it so we can handle capacity. Obviously, every year we can't predict how many expats will come, but we're very lucky that every year more and more people come to us. I mean, we grew 50% this April, right? Which is wild, but I'm so thankful that we have created a tax software that really, really seems to help all of our fellow Americans. I mean, I use it for my own taxes. I never imagined something that I needed would, be so needed from others. So that's kind of the story, the origin story, right? Is I also want to do my own taxes by hand. And so, yeah.
Necessity is the mother of invention, as they say. And I'm so glad that you figured this out, because I had a similar situation a couple of years ago. I had a tax firm in the US who was handling my taxes, and then they were overwhelmed with work and they didn't have resources. And so those people who didn't give them a lot of business were cut loose. And that left me scrambling to find somebody who knew expat taxes. And the person I found was not well versed, and I learned from that. And then this year I went looking, And I found some people who said they could do it, but it was quite pricey. So I said, I'm going to do this on my own. And if I'm going to do this on my own, I need a tax software. Had MyExpatTaxes not been there, I would not have been able to create MyExpatTaxes. So I'm so glad you got there before I did.
Yeah,
Yeah.
it's a necessity. I mean, that's the thing is, if you live abroad, you have to accept that as a US American, you still have to file your US taxes, and it's not that simple. But I want to also point out that while it can look like a very burdensome kind of process and it's annoying and you're thinking, what's the point? Why do I have to do this? There is a flip side. So if you are willing to go into it, if you're willing to get a little bit more financially savvy, you can use it to your advantage. You can still contribute to your individual retirement accounts in the US from abroad, right? You can still invest in, different investments, US based investments. You can still be in the US market, for your investments, for your assets, for your retirement. And you can really use your US tax return to help you funnel that, right? You can even still be paying into US Social Security credits from abroad. And then that means that maybe one day when you retire, you get both, your foreign pension, but then also US Social Security benefits that is directly deposited into your foreign bank account. And so I really hope that, the first step is to realize it can be easy, and you can do that with MyExpatTaxes. It can be an easy process. And the next step is to think, how do I use this to help, add to my portfolio, right? Make sure that I am financially secure in two different countries and use that as a benefit and not feel like it's against you. So that is one thing I want to kind of get that message out a lot more. It's not just filing paperwork. It is something to do with your financial identity and your financial health.
I like that. Looking at, I don't like taxes. I mean, there may be some people out there who like doing taxes.
I don't think so.
You don't think so? But I think if you can, find a silver lining or look at the flip side and say, okay, I got to do this. How can I make this truly benefit me? And I think that's a powerful message with anything, really. So you got this business going. It's doing well. I want to ask you some questions about, what are some things, and maybe we'll take 5 things that you feel are the 5 mistakes that U.S. expats make when filing or not filing their taxes.
Okay. There's a couple, right? But I would say the first one is not realizing when you have to file your taxes. So like I said, obviously there's the filing thresholds, which you can read. It's about 12, 13,000 USD, right? However, what you don't actually see so obviously is if you're self-employed and you make over $400 in self-employment income, you have to file a US tax return because you might have to pay Social Security tax on that. So it's called self-employment tax. If you are married to a non-US citizen and you're choosing to not include them on your US tax return, that filing threshold is $5. Really, it's $5. So the first thing is not fully understanding other situations where you might have to file, and it can be a lot less than the standard deduction of $13,000. Mistake number 2 is when people are filing, they don't realize there's a lot of differences in the tax law. So, for example, in the US, most of the time, if your employer is contributing to a 401k account, that's pre-tax and it's tax deductible. So it's not even included in your compensation on a W-2 form. But if you are abroad and you're working for an employer and they contribute to your pension abroad, every euro, pound, dollar that they contribute to your pension as your employer, that's considered taxable income, except for 5 countries. So, like the UK, Belgium, Netherlands, Germany, Canada. But if you're not in one of those countries, then if someone's contributing to your pension, that's considered taxable compensation. That's also included in your wages. So people forget that. And that's something obviously US tax softwares will never catch because they just don't have that on their radar because it's very different. Number 2 is thinking that you can just easily contribute to an individual retirement account without looking at your tax return. Because if, for example, in order to contribute to an individual retirement account, IRA, you have to have enough taxable compensation. If you end up using the foreign earned income exclusion, right? If you know a little bit more about US expat taxes and you exclude all of your income with the foreign earned income exclusion, you have no taxable compensation. So you cannot contribute. Or if you're married to a non resident alien, so a non US citizen, you actually really can't contribute to a Roth IRA if you make any income. So you basically just can't contribute to a Roth IRA at all. Income threshold is quite low at 10,000 USD, where it already gets reduced. And it's, having to be savvy about that, where it means, okay, look at how you file your tax return. Are you using the right tax, like the tax benefits to allow you to contribute? And then on the flip side, if you have too much income and you can't contribute to a Roth IRA, which is more popular for expats just because we don't really need the pre-tax deductions, but we want the whole tax-free earnings at the end. It's, if your income is too high, how do you use your tax return to make, a backdoor Roth IRA contribution versus a traditional Roth IRA contribution? I I know this is detailed, but I just say these are the most common mistakes I
Mm-hmm.
see.
Mm-hmm.
Number four is, let me think. So you are abroad. You say, I'm going to invest in this country. I'm going to, I'm at my local bank. They said I should, like in France, I should invest in insurance fee. I should invest in these type of, in securities or these mutual funds that are based in Germany, and not realizing that can cause a little bit of a headache on your U.S. tax return. I say a little bit, but for most people it's a big headache. And additional fees, right? There are additional taxes and scrutiny on foreign investments you make. These is normally called like PFIPS, PFIC. You see a lot of that if you Google it, and it sounds very scary, but I tell you, through MyExpatTaxes, we try to make it a very affordable and, you know, kind of manageable process, because we don't think that we should scare expats out of investing locally. We
Right.
just want to tell them, hey, if you do plan ahead, and this is how you plan, and don't just make 100 investments through a robo advisor, but pick two or three that you really believe in, and then that way you can keep your tax preparation fees down. And then number five is starting a company abroad, right? You you're like me, you're in Austria, you have an idea, you want to start a GmbH, and not realizing that that can also again cause a big headache on your US tax return. And again, not trying to tell people don't do it, right? Because again, I'm not about scaring people that, hey, you're US American abroad, you have all these restrictions. It's about, yeah, just think about, you have to plan. Now you have to plan a little bit more, because you have to plan about how that's handled in your local country plus the US. And again, we try to make it as affordable as possible and as manageable as possible, but just understanding that you can't just throw money in different pots without thinking about it on both sides anymore.
Mm-hmm.
I think it's the general mistake.
Yeah, it's not the same. It's you have, crossed this threshold where things are different and you need to think about things differently, or understand or start to learn about what that means. Um, so those are good ones. I think, $5 is not a whole lot, right? And so if
Yes.
because you're married, and it's that really, you have to file, right? You have to file. So I want to open it up to questions, but I also want to, continue this conversation. I You seem so very knowledgeable about this. What is How have you gotten to this point? Because like, can you rattle those things off like, oh yeah, and they're so detailed. And how have you grown this understanding, this wealth of knowledge?
I answer questions all day
Mhm,
long.
mhm,
No, but it goes beyond that. So the thing is, if it's like in school, if you really want to learn something, you study it,
mhm,
then you have to basically, how do I say, you have to then explain it to someone else.
mhm,
And so that's one step. But to go one part further
mhm,
is, I am, one of the main tax experts. I'm also one of the programmers. And so the whole tax engine, we have our own tax engine. That's why we can do what no other US tax software can do. We can do what no other expat firm can do is because we have our own tax software. Our tax engine is ours. And
Mhm.
I add to it every day. Our tax team adds to it every day. And I'm the main programmer on that. And so think about every single time I have to research something or learn something, it's not just reading it. It's about really understanding the instructions and then having to program that to
Mm.
so that
Yeah.
so that now, the thousands of people that use my expat taxes can benefit from that knowledge. I'm all
Mhm.
about, I don't like learning something without it having a benefit. And so almost everything I learn, I make sure, okay, I can automate this and I can make sure that other people don't have to go research this themselves. Right. And
Right.
so that's probably where you see this kind of very deep knowledge on all these different topics,
Mhm.
because I have to learn it, I have to understand it, I have to code it,
Mhm.
and then I have to somehow make it in a way that's very easy to understand, for the end user. So
Mhm.
that's yeah, that's the process I go through every day.
All right. So a question, I don't see any questions coming in. Now is your time, right? If you have any tax questions, um, put them in the chat and we will address them. But I often hear people talk about, oh, well, if I move abroad, then I'm going to be double taxed. Can you talk about that? What does that mean? Is that true?
Yeah. You're not really double taxed. There are a few scenarios where you can be. So I'm not going to say you'll never double tax, but the way that it's set up is to prevent double taxation. And so you have three main expat tax benefits to draw from. The first one everyone kind of knows is the foreign earned income exclusion. So if you
No,
work
I don't know that everybody knows.
oh, the first one is the main one is foreign earned income exclusion.
Right.
That's on form 2555. And that basically means if you work abroad, then any salary or earned compensations through an active partnership, through self-employment, business, that up to, a certain amount can be excluded from your US tax return, right? So that amount now is 120,000 US dollars. So that is amazing because basically it says if you work abroad and you prove that you've been abroad for long enough. So either that you have been abroad for an entire year and you're registered abroad, so you pay taxes locally, or at least you're registered as a resident locally, then you can use this. Or if you've been abroad for 330 days in a consecutive 12-month period, even if you're like a digital nomad and you're kind of moving around, you can use this benefit. So that is one, right? So if you're not, I mean, obviously this doesn't cover double tax, because if you're not paying US taxes, or you're not paying any taxes locally, or not that much, you can still end up not paying any US taxes. So that's one benefit.
Mhm.
That's only on earned income the and foreign earned income. So the common mistake there is people forget that if you go to the US and work out of the US, like for a business trip, even if you just say, I'm going home to visit family, but I'm working while being at home, any income you earn while you're physically in the US is no longer considered foreign. And so you can't exclude it. So, anyways, that's one, right? I'm kind of
Mhm.
diverging from the question at hand. But the second expat benefit is the foreign tax credit. So this one is the one that really makes sure that you're
Mhm.
not being double taxed, which means
Mhm.
if you pay income taxes in France on your income, you can use these income taxes on your US tax return to lower your US tax burden. So if you owe $10,000 US in income taxes, but you pay, 10,000 euros in France already, you can use that 10,000 euros, obviously convert to USD. It's going to be a little bit more than 10,000 USD. You can offset your entire US tax liability with it.
Mhm.
The only caveat to realize there is you have to have income taxes in the right bucket. So that means that if you pay French income taxes on your wages in France,
Mhm.
you can't use that foreign tax credit to offset, investment income. Because unless you
Mhm.
pay taxes on investment income in France, you can't use your wage income tax on investment income. And that's just because of the way that form's set up. And that form is 1116. And there's different buckets. So there's like a general bucket, which is usually for salary or pension income. There is a passive bucket for investment income. And again, you can't really mix match those foreign tax credits. And then the last one you might be thinking is, okay, well, this is not earned income. This is not salary. This is not self employment. And I don't pay taxes on it, right? So, say Social Security benefits. You're getting Social Security benefits locally in France or in other countries. Most of the time, you're not paying income tax on unemployment or, paternity or other types of Social Security funded income. is the US going to tax it? Well, that's where a tax treaty comes into play. So there are multiple tax treaties, and those will basically say, hey, Social Security funded income is normally only taxable in the US, or it's only taxable by the country that paid it. So that could, be France, or can be, whatever country. So the tax treaty is kind of the last tax benefit to use if the other two fails, so to say.
Mhm.
So you are actually very rarely double taxed. With tax treaties, I do want to warn you cannot read a tax treaty upfront, because every tax treaty is already hard to understand. But if you read it, you'll see, okay, there's like all these benefits for capital gains or for royalty income. But then if you really understand it, you'll realize that there's a savings clause. And what a savings clause is basically says, as a US citizen, 99% of this treaty does not apply to you. Don't even bother, waste your time on it. Only like 1%. And there's literally a paragraph in every tax treaty that says, out of all of the articles that are in this treaty, only these 5 paragraphs can be used by US citizens.
Mhm. Mhm.
And so, long story short, you are rarely double taxed. It can happen in the two most common ways I see it happening is maybe if you have a lot of investment income and you're a high earner, there's something called net investment income tax, which is a social security tax. You cannot use foreign tax credits to offset it. I know it's in the courts right now, but the IRS has not officially responded, and they're still not allowing foreign tax credits. And then the second one is if you have a foreign corporation and you have something called GILTI income. So basically, you own more than 50% of the company as a US American, or it's owned by US people more than 50%. So it's mostly US owned. And then you have net profit, and then you don't have enough corporate tax, then you can see some taxation on that. And you can't necessarily use your corporate taxes to offset it. So that can be another situation where you do get double tax. But like I said, the average expat doesn't get into these
Yeah,
situations.
because there are these three things that could
Yeah.
prevent that, help prevent that. All right, we got some questions coming in now. So this is from Natina. Hi, Natina. If you do not make any taxable income, if you are seeking early retirement and living off savings, you have to file taxes with the USA when living abroad.
Yeah, so it depends, right? What does that mean to live off your savings? Is that money you have in the bank already, or is that like investment income? Because like you're probably earning interest on that cash in the bank, right? So even if you're earning interest, so if you're married filing separately and you earn more than $5 of interest, whether from a US bank or a local bank, you have to file taxes in the US. That's the law. If you're obviously, a single filer or married filing jointly, the standard deduction is a lot higher. So maybe you don't have to file, but you have to think that living off your savings, you're putting your money somewhere. So you're probably actually getting passive income somehow. You're probably going to get some interest income. Maybe you have money in, retirement accounts that's drawing dividend income. Maybe there's capital gains. Maybe you're drawing for 401k or an IRA, and then you get a 1099-R and there's distributions from it, right? So you are technically still making income in these instances. Obviously, if you have your cash in a bank, you make absolutely no income, which I also don't recommend, because you should try to get some passive income, at least interest, right? Then no, you don't have to. If you have no income, right? It's not about taxable income. It's if you have no income, you definitely don't have to file a tax return. You might have to file an FBAR depending on where your money sits, but
FBAR, can you
yeah.
explain that?
So FBAR is a foreign bank account report, basically. So there's two sides of it. So there's the tax return that goes to the IRS, and then there's the foreign bank account that goes to the Treasury. And if you have over 10,000 US dollars of, I backtrack, if the max balances of all your foreign financial accounts at any point in time combined, converted to USD, is over 10,000 US dollars, then you have to file this foreign bank account report. And that there's no tax on it. It's purely informational. But I just basically wanted to highlight that, while it kind of seems like easy, hey, I'm going to retire and I'm not going to make money traditionally from employment, I don't have to file a tax return. Just remember that IRS considers worldwide gross income from all sources. So this includes interest and other investment income. If you have rental income, if you have foreign rental, US rental, if you get if you put your money in a bank account in, Portugal because you retire there, but you get Portuguese interest, it's reportable to the IRS. It's probably not going to get taxed, right? Most of these chances you'll go under the standard deduction or you'll have foreign income tax credits to offset it. Obviously, if you make a lot of investment income and you don't pay income taxes anywhere, then expect to pay in the US. But it can be more complicated than just saying, I don't work at a normal job anymore, so I don't file taxes.
Yeah.
I hope I answered that and I didn't just get you more.
It makes sense to me, but Natina, if that's not clear, let us know.
Yeah.
All right. Here's another one. I think this one's for me. Brian White asked, I understand that my Social Security benefit would not be taxed in France, but what other, is that true?
I'd have to look at the
Okay,
French.
so you're not sure about, okay.
Right. So I can't confirm right now because
Right.
that's
And I can't either, which is why I asked you. But
Yeah.
what other taxes like social tax would I expect since I would be using the healthcare system and other services? So Brian, I with my business, I pay into the social charges quarterly, and I pay 22% of what I earn. If you are retired living in France, I believe there is something called PUMA, and PUMA. I'm not sure what it stands for, and I think that would give you some information about contributions to the healthcare system that you might need to make. So that's the extent of my knowledge with that. So hopefully that's helpful. PUMA, check it out.
I just looked at my notes and
Okay.
yeah, so France is one of the countries where Social Security benefits is taxed by the payer. So if it's US Social Security, it would not be taxed in France. If it's French Social Security, it would not be taxed in the US.
Okay, great. Thank you. Let's see what else we got here. Here's one. This is Victor Brown. I worked for an American company in Saudi Arabia, so money was taken for Social Security. Then the Saudis bought the company and we could no longer make contributions. Is this still the case? Do you know?
Yeah. So from what I hear, basically you were a W-2 worker, right? Working in Saudi Arabia. And then you still had Social Security tax withheld. You don't have to do that, right? If you work abroad, you actually don't have to do that, but you had it. Now that it's not a US company, there's no reason why they would withhold US taxes on your behalf, or Social Security tax on your behalf. There's not really a way to contribute as an employee to Social Security, from abroad. You can contribute as self-employed, right? So that's what self-employment tax is. But if you are working in Saudi Arabia for a Saudi Arabian company, I don't think they're going to withhold any taxes for US Social Security because it's just not something they would do. And there's not really a system in place for it. And on your tax return, you cannot elect to do that. But if you wanted to contribute to US Social Security as an expat working abroad, what you could do is you could basically get some type of self-employment income. It doesn't have to be a lot, right? You start paying into US Social Security the second you make over $400 of net self-employment income. So it could be, doing some writing or I don't know, any type of self-employment activity that fits your hobbies. And if you make over $400, you would file Schedule C and Schedule SE. And then there you can then pay into the US Social Security system if you still wanted to. Some folks do, because again, I do recommend everyone that's an expat check your US Social Security benefits account. You can do that online. There might be a little bit of turbulence with the identity verification process because obviously you're an expat and you don't have, the credit cards, the mortgages, everything that you might need. But once you get through, you can see how many credits you have. And then you can see, okay, I'm close to 40 credits. So like I worked in the US, right, as a W-2 worker. I don't have 40 credits yet. So I definitely want to keep contributing as I continue to work so that one day I do have 40 credits so that I can draw from the US as well.
Mm-hmm. All right, great. So let's see what else we got here. I don't know if you will be able to answer this or not. We'll see. And there was a question before this, so I'll read the question before, and show this other one. I wanted to know, this was from La Dolce Vita. I wanted to know about world holdings. I live in Italy, but have relinquished my residency because they tax my 401k. I retired living off of Social Security. And then this question is, I have heard that in France you have to report your worldwide holdings, but are not taxed on it. Is that correct?
I can't confirm on French taxes, unfortunately,
Okay,
but I
and
do
I
know a
can't
lot
either.
of, yeah, a lot of countries do have
Yeah.
kind of this wealth tax. I have not necessarily seen that out of France, but again, I cannot confirm or deny
Mhm.
any of this. I'm not a French tax expert,
Mhm.
but it is common that a lot of countries in Europe will ask for your kind of your investments, your
Mhm.
holdings, how much wealth you have, and then you may or may not end up paying like anywhere from a 2% tax on it or so. That's very common in countries like in the Netherlands or Switzerland.
Okay. And the next one is from Michelle Thompson. I guess this is talking about FBAR. Is that every time it reaches 10K?
So the F bar again is it's so interesting how they had worded the instructions. Um, it's not about an individual account reaching 10,000 US dollars. I want to make that 100% clear. It is about all of your non US financial accounts, bank accounts, pension accounts, life insurance with cash values, securities accounts, investments account, etc., etc. If the max balance, so in the year, right? Obviously, you have different balances in a bank account throughout the year. The max balance at any point of that year, you have to say, okay, account number one, the max balance was 5K. And then I transferred that money to account number two. And then now the max balance in account number two was 6K. And then, I have another account that has a max balance of 3K. You would add in then, the 5K, the 6K, and the 3K, convert it to USD. And if that is over 10,000 US dollars, yes, you have to file an FBAR and you have to include every single non US foreign financial account you have on that report, not just the ones that reach 10K, but every single one of them, even if there's no money in it, right? Even if it's just an empty account. So it's really tricky. It definitely double counts. So if you're transferring money between accounts, you're like, hey, this is the same money. It doesn't make any sense, but that's just the way the rules were written. And again, there's no tax that is charged on this. Generally, if you are an expat, I just say that because there's always an exception to everything. And if you are a US person living in the US and you have foreign financial accounts and you failed to file the FBAR, and now you have to go through this streamlining procedure for domestically, there is a 5% tax on it. But if you are an American abroad and you haven't done it and you have to catch up in your streamlining, there is no tax on the FBAR. It's purely informational. But
So,
again, it's not about one individual account reaching 10K. I know people that are like, oh, I keep all my accounts under 10K. It's about the combined max balances of every non-US foreign, like every non-US financial account.
and so so I have a question. So anytime within the year, right, January to December, when is this due? Is it due at tax time or?
October 15th is the final deadline. It's due April 15th, but there's a 6-month automatic extension. So that means you don't have to do anything. So the effective deadline is October 15th. But there
Okay,
is no,
for the year for the year before.
yeah, for the year before.
Yeah. Okay. So hopefully that answers your question, Michelle. And let's see what else we got here. Let's see. This is Ishua Sharon. Are there any tax implications for those having student loans and moving abroad?
So you can still claim student loan interest deductions on your tax return if you're abroad. The only issue would be if you're married to a non-US citizen and then you opt to not include them, then you're married filing separately, then you cannot claim student loan interest deductions. But even if you can't, most people don't need it anyways because you end up not having to pay taxes. You don't need the deduction. One thing I will say is one, I'm not saying that this is a great strategy or a good one. I'm just saying a strategy that I see from expats. And again, this whole thing of using your US tax return from abroad for your financial needs is people will opt to use the foreign earned income exclusion, which will get their adjusted gross income to zero. So like say you make 50,000 US dollars abroad. You only work abroad, you can use the foreign earned income exclusion and you exclude 50,000 US dollars from your tax return. That means that on your tax return, the line adjusted gross income is going to be zero, which means for some income based student loan repayments, because it's your adjusted gross income on your tax return is zero, you end up not having to pay any repayments at that time because you don't have income. I have seen it. I'm not saying it's a good strategy or it's a bad strategy. I'm just saying it's something expats definitely do. Just remember, obviously, there's interest on, any balance due. So if you're not paying, you'll accrue more interest. But of course, if you are in a position where you do not want to make student loan repayments at that time, that is something you could do. You could use the foreign earned income exclusion to lower your adjusted gross income to zero, and then use an income-based student loan repayment method to stop your payments.
Mhm.
Like there's so many tricks and strategy, and it can get really interesting. I'm telling you.
All right. So I'm not seeing any other questions, but one question that I do want to ask for, in case there are people out there who watch the replay, is if I've already moved to a foreign country, I'm a U.S. citizen, and I've been here for say 3 years, and I thought I didn't know that I had to file my taxes. Is there, I guess, what do you do in that situation, and is there a penalty?
Yeah. So in that situation, you normally would go through the streamlining foreign offshore procedure. And we offer that in MyExpatTaxes. So you just go into myexpattaxes.com, say, we literally have a button. When did you last file your taxes? And it's like this giant button. I've never filed, or I haven't filed since 10 years ago or 5 years ago, or etc. And we'll say, do you want to go through streamlining? And streamlining is an amnesty program from the IRS itself for this exact situation. So if you are living abroad, generally, they're only counting for really 1 year. So as in the past 3 years, if 1 year you were living abroad, you didn't have a home in the US, you were abroad for more than 330 days in that year, you can use the streamlining procedure, assuming, you were not filing because of willful conduct, but basically it's non-willful. So you just forgot, you didn't realize you had to file, you're not trying to evade taxes, right? You can go through this procedure, and what you do is you file your last 3 years of taxes, right? So now it would generally be, filing for 2020, 2021, 2022, and then you would file your current year of taxes. And then that's the federal tax package, right? So you would file 4 years. It can't even be less. So if you didn't have an extension to October 15th for this year for your current year, you technically could only file 2021, 2022, and 2023 as your streamlining years. And then you would file the last 6 years of FBAR, so this foreign bank account report. And then it would just all come neatly into this package that we prepare for you, where you do have to paper mail the back year. So you would have to paper mail the 2020, 2021, 2022 tax return. We have the certificate in there that says that this was non-willful, these are the reasons why you didn't file a tax return. And then there is really no penalty. There's no penalty for late filings. There is interest, right? So obviously if you do owe taxes, most people don't, there is interest. And what I want to say too on top of that is most people don't owe taxes, but because of the stimulus payments, most people do get a refund. So if you haven't been filing taxes, please do it soon. We already are past the deadline for the 2020 stimulus payments, which was $1,800. But there's still the $1,400 stimulus payment that's on the table. And you have to basically claim it before June 15th of next year, right? So this is the time to get caught up if you haven't, because you'll probably get a refund. And while you would pay interest if you owe taxes to the IRS also pays you interest if they owe you a refund, and their interest rates are very high. So their interest is like pretty good to get back. So again, it sounds scary, but the main point is, even if you haven't filed for 30 years, you do not have to catch up on 30 years. You only have to catch up on 3 years and 6 years of FBARs. And most people will not owe taxes. Most people will get a refund. And I didn't talk about this, but this is another common mistake. If you have children abroad, if they're US citizens, if they have a US social security number, they're under the age of 17, and you live in a country that's generally a high income tax country, France included, Germany, Austria, a lot of the EU countries, you'll probably get a refund on your tax return. up to now it's up to $1,600 per child. That's additional child tax credit. But you only get that refund if you don't use the foreign earned income exclusion and making sure that you have, earned income for it. And so again, there are so many expats out there that are so terrified to file because they haven't been doing it and they're terrified to catch up. And then they're getting thousands and thousands of dollars in refunds, right, through the streamlining procedure. And then on top of that, there is no penalty. You're completely caught up, in the eyes of the IRS, even if you haven't filed for 20, 30 years. And, one other thing is, even if you've been filing, but maybe you didn't file correctly because you used, a US based tax software, a US based tax service, if you have like a foreign corporation or you had, foreign, like complicated foreign pensions that end up looking like foreign trusts, and these other kind of complex things where the form that you need to file has like a 10,000 late filing penalty because they exist, you could use this procedure to amend your tax returns as well to get rid of those late filing penalties. So in short, if you haven't been filing, there is a way to get caught up. You will most likely get a refund, right, for the year 2021 because of the stimulus payments if you didn't get them already. And yeah, it's going to be pretty overwhelming because you're doing 4 years at once and then 6 years of FBARs, but afterwards it gets a lot smoother. And we support this outright in MyExpatTaxes.
Yeah.
Of course, we have to charge per year, so it's not 149 euros, but we try to make it as affordable as possible.
Right. Thank you. I'm going to end with one last question. And Victor Brown says he has a friend who's been in France since '83. After 6 years, he stopped declaring taxes, saying, "What are they going to do? Come to France to get me?" Any thoughts on that? He rarely ever returns, I guess, to the US.
I always say this, it's one of those things where it's the law. You have your US passport and you're a citizen of that country and you should follow its laws. I don't want that hanging over my head.
Mm-hmm.
But again, it is a good question. Will they come to France to get you? Probably not. Would they, technically they wouldn't stop you at at the airport border either, unless you owe, only in instances where you owe over 50,000 US dollars and they know of it, right? That's one instance where it is very clear that they would not allow you to renew your passport. But it's the law. It's the law that you should follow as a citizen of that country, and it's up to your risk profile if you want to follow that law or not. I don't know. It's again one of these questions.
Yeah.
If it says don't cross the street because it's red, but there's no one looking. What do you do, right? So that's up to you. And just remember, there's a lot of things that come into play. Maybe one day you want to go back and work there. Maybe one day you have family that might want to go back and work there. Maybe you have assets there still. You have retirement accounts, you have investments. Maybe you have relatives that they're going to give you, an inheritance. These are the situations where I see people start coming out from under that rock being like, hey, I should have got caught up because I actually still do have ties to the US that I didn't realize, right? So to each their own. I just say, if you want to get caught up, if you want to do your taxes, MyExpatTaxes is here to support you in doing so, right? In whichever way we can. But we're not going to force you to. That's not my job to force you to file your taxes.
Yeah.
Just here to help you if you want to.
And Victor says, thank you. This was an informative and interesting. So I want to thank everybody who has joined us live today. And I want to thank people who are going to be watching the replays. If you found this, helpful or informative, be sure to share it with friends and like it so more people can see this. And I did want to have, let me share the My Expat Taxes with you again. It's MyExpatTaxes.com. You can go there. I've done it. I've used it. It's very simple. You start entering your information and they ask you all of these questions. And then at the end, you pick your package. The package I chose was, I think, just above the basic, which was I had the software, but then I had somebody check it over for me. And I found it was a really good solution. So I'm so glad that I found My Expat Taxes. And I'm so glad that Nathalie is here today to share all of this really, really good information. Nathalie, any last thoughts, any last words?
I would just say, as you continue or you're looking to start your expat journey, it's like the taxes. Just don't let don't let the fear stop you, right?
Mm-hmm.
It's whatever you put off is going to be more stressful than just handling it. That
Yeah.
and there are resources. So that's the other point is as you are in this journey, you're not alone. It might feel very lonely. It really can feel lonely. There's 9
Mm-hmm.
million of us
Mm-hmm.
that's going through the same exact thing. And while maybe you don't see us in person, just know that the expat community is very strong. People are there to We're here to help you, right? You
Mm-hmm.
can be in our Facebook groups. MyExpatTaxes, we have our own Facebook group. It's very lively, right? There's multiple Facebook groups. There's multiple, communities out there that's online, right? Patricia has her own community, and you will see that we are just happy to help, to chat, to listen. And so, we're always there. And I see the question on the screen. So if you want to get in contact with me, you can always go to myexpattaxes.com. Right there is a chat box that can help you send an email if you need it, or talk to a support specialist if one's available. You can just send an email to team@myexpattaxes.com. You can find us on Facebook, on Instagram. There are so many ways to find us on the internet. Just check out myexpattaxes.com and you will basically see everything you need. And the thing is if you ask us questions, especially more complex tax questions, usually they end up on my table, right? So maybe
Mm-hmm.
you don't see my name answering it and you see another team members, but basically, like I said, I just answer questions all the time. So if your
They're
question involves,
creating work for you.
yeah, even if I'm not signing off on it, it's most likely something I have answered myself that, someone brought to me internally. So just look for us online. You will find a way to answer us, but the best way is to just go directly to myexpattaxes.com, and you know that's
That's
all I have
it.
to
Well,
say.
great. Well, thank you so much, Nathalie, for joining today. As you heard, the fear is worse, and the delay and avoidance is worse than just getting it done. And, if you are thinking about making a move abroad and you have some fears or some doubts, have a discovery call with me. You can do that by going to thecouragecatalyst.com/future expat. And we can have a conversation about where you are in the process, what might be holding you back, so that you can finally make your dream a reality. All right. Thank you again for joining us today. It's been wonderful.
Thank you, everyone.
Take
Bye.
care.